Big news in the labor market this morning is moving interest rates in a good way, so we're going to talk about it on today's video. Today is the 7th of March, Friday. I hope you are doing well. Well, as we did last week with important economic data coming out of the PCE, we got jobs data this morning. The report, when it first came out, y'all, was pretty much in line. The headline number came in at 151,000 new jobs, 160,000 were expected, so that's pretty much in line with expectations. However, the internals of the report were much weaker than expected. So the unemployment rate actually ticked up from 4% to 4.1%. That was not expected. Keep in mind that the non-farm payroll report, the Bureau of Labor Statistics, applies what's called a birth-death model to calculate the rate at which jobs should have appreciated. In other words, they use an algorithm to say this is how many jobs grew based on vacancies and availability and the number of people that were born and the number of people that died. That algorithm had 136,000 adds to this report to get us to that 151,000 new job number. If you just call and survey households the way that the household survey does, this is where the unemployment rate comes from, you get 588,000 jobs lost in this report. Frankly, that's probably a more accurate component, and the market is certainly reading it that way. Bond market is rallying strongly today. It's up 16 basis points on the day in price. Remember that yields move inverse to the price. Actually, correction as of 11:51, it is up 11 basis points. So we're giving back a little bit of this morning's gains in pricing. Here is where rates are today, y'all, in the national average. According to Mortgage News Daily, a 30-year fixed rate conforming loan is sitting at 6.70% today. Y'all, you got to go back to December 6th of 2024 to find rates as low as they are today. 6.74 is where we were a week ago, so we're fairly flat over the week, trending slightly lower. But 30 days ago, y'all, we were at 7.03 in that Mortgage News Daily survey. So we are down a third of a point in a month. That is a nice direction, y'all. We are seeing a nice trend line starting to establish as far as bond prices are concerned. We are testing some ceilings of resistance, some automated trading levels that kind of put a cap on how far we might go absent some significant news. But that news is starting to be provided to the marketplace. And here's what we're seeing. Volatility in the marketplace, uncertainty in the marketplace tends to pull money out of equities, and it tends to put money in fixed income securities. They call that a flight to safety, and we are certainly benefiting from that. That's giving us the lion's share of the improvement that we are seeing, y'all. It's not all Fed futures based. A lot of it is just where people are feeling comfortable putting their money. And right now, they are not comfortable with where stocks are evaluated. If you look at the Dow Jones, we had a high of 45,073 on December 3rd of 2024. So 4 months ago, the Dow was 2,555 points higher than it is today. So the Dow in the last a little over 90 days has sold off 5.7%, y'all, as the markets try to grapple with what the reality of tariffs will bring, the direction of Fed cuts in the future, how inflation weighs into all of that, whether federal spending cuts are actually real, how the additional job cuts that we're seeing at the federal workforce level might impact future employment reports. All of that is trying to be digested by stocks, and it is causing jitters in those marketplaces that are benefiting bonds, and we are certainly seeing that today. So much so that if you look at the CME FedWatch tool, there is now a 43% chance based on Fed funds futures of a Fed cut in May. Y'all, that's pretty much been off the table until this BLS report. So we're seeing a good possibility of a Fed cut in May, or at least those chances increasing significantly. And we are now up to an 86% chance, according to Fed futures, of a June cut at the June 18 meeting. So that cut is looking like a lock at the June meeting, if not before. I would not be shocked to see the Fed move in May, y'all. So interesting things to follow. Looking forward to keeping an eye on it for y'all. I hope everyone is going to be safe this weekend. Have a productive weekend. If you sell a house this weekend, call me. I've got money for it. And that money is cheaper today than it was even 3 months ago. So in any event, we are here to help your clients. We're always honored to have your referrals. Stay blessed. Stay safe. We will talk to you next week.